everyone, it's Gia Silva, owner broker of Inti Realty here in Long Beach. And as you know, with so many things happening in 2020, we here at our company, our team is dedicated, and we know it's our duty and responsibility to keep you posted as to everything that's happening in this environment, in this crazy current environment. So today we have a real treat. I have invited a personal friend of mine, as well as our trusted and well-respected lender, Mr. Troy McCleery. He is the Vice President of Pacific Capital Mortgage with over 30 years of experience in mortgage lending. Troy, thank you so much for joining us.
Thank you very much. I appreciate it.
Yes. It's going really, really good. And just to give everyone a background about, how we met, we have been working together for about like 10 years now, right?
Yeah, pretty close to 10 years.
Just about 10 years. And, I have worked with several other lenders as well. And I've come to find out that not only are you well respected, but very ethical. You get the job done. And I absolutely love how you've been able to navigate us through the changes that we're seeing right now because of COVID-19. So let's get right into it. Troy, one of the questions that right now we are getting, and this is both from, our sellers that we're working with, our apartment owners as well, and buyers. How has COVID-19 affected lending? Let's just start for single family homes, condos, townhomes. Has it affected residential?
Well, it's affected residential in a few different ways. Is that there's a little more verifications that go on now, especially at the closing. We have to make sure that everybody's employed.
Okay.
We did before, but it's a little bit more intense now. So we have to verbally contact the employers to make sure that you're working, you're still employed within 48 hours of funding. Okay.
Oh, okay.
Yes. As far as appraisals, it's helped in some ways and it's slowed down in some ways as well. Is that on refinances and purchases, we are getting a lot more appraisal waivers, which means that we don't need an appraisal as long as it's fitting within the AVM, the automated value that Fannie and Freddie have. So we are seeing a plus on that. But then when we do need appraisals, we are seeing a little bit of a slowdown on that, just because of the fact that a lot of appraisers do not want to do interior inspections. Okay. Right. So those appraisers that are doing interior inspections, they're just getting more work. So it's the appraisers are delayed a little bit longer as well.
Got it. And Troy, just regarding that point, because I hear you when you say, depending on, I guess, loan to value also is when they're going to realize if they're actually going to do a desk appraisal or go to the property, right?
Yes, ma'am. Absolutely. So.
Okay. So that's
and the thing about desk appraisals or drive-by appraisals is they don't get to see the interior. So what happens? We've had some desk reviews come back short on value.
Okay.
We got the appraiser into the property, and the appraisal came in at full value. So.
Got it.
That it does have an effect on values at sometimes.
It does have an effect.
Yeah, absolutely so. Absolutely so. Especially when it is a desk review.
Now, and I've also seen that there are mortgages, there's even purchase mortgages with, buyers that are putting 20% down on a purchase, and yet they're still doing a desk appraisal. So,
absolutely so, because what happens is that, again, it has to fit within the certain box of the AVM, the automated value, to obtain the appraisal waiver or the desk appraisal.
Okay.
So if it's pushing values, then you are going to have that full appraisal.
Okay. Perfect. So far you're saying that a verification of employment happens like a lot of different times, as opposed to before COVID, it really only happened once or twice during the transaction.
Absolutely. Right? So you would get a written verification.
Okay.
And then, it was just a quick phone call. Does he work there? Yes. Okay. But now it's a little bit more intense. We are still working there. Exactly. So, and we do need to get a current paycheck stub right before funding as well.
Got it. Okay. So definitely change in verification of employment, also changes in appraisals. Anything else? Anything else that you've seen in how
what we saw in the beginning of March when COVID first hit? There was a lot of lender overlays as far as debt to income ratios, loan to values. Okay. I mean, it tightened up very quick.
Yeah.
But probably 99% of the overlays are gone now.
Okay.
Just because everything's starting to open back up.
Got it. Okay. And now we have seen, because as I speak about, multifamily and even luxury, we get into bigger loan amounts, right?
Yep.
So
Yep.
I know that we have seen some delay in jumbo loans. Can you give us a little bit of insight as to where jumbo loans begin and what you've seen in terms of how they've been affected?
Well, jumbo loans begin on a single family residence.
Okay.
Let's see, my apologies.
That's okay.
All righty. So jumbo loans begin at $765,601.
Okay.
Okay. Jumbo loans have been affected the most out of the COVID-19.
Okay.
Because what happened is when the liquidity left the market,
Yeah.
okay, jumbo loans were directly affected. Okay. So we saw down payments go up. Okay.
Okay.
On a single family residence, you're looking at 25% down now.
Okay.
Or, and some are coming back with 80% or 20% down payments now. So we're starting to see the market open up. So every day that we see more liquidity go into the market, you're seeing the jumbo markets open up a little bit more as well.
Got it.
Okay.
Now and I know that you and I have discussed this discussion as to, owner occupied, non-owner occupied. What are some of the changes that we've seen for down payments for owner occupied and non-owner? I believe it's specifically non-owner, it's higher now, right?
No, not at all. So if we're buying a single family residence as an investment property, okay, it's still 15% down minimum.
Okay.
But we like to see at least 20% down on that.
And now aside from some of the lending delays, from verification of employment happening a couple times, desk appraisals as well. What are some of the biggest changes that you have seen this year now?
Biggest changes this year is where rates are at. Okay.
Yeah.
It has created another refinance boom.
Ah, yes.
Okay. So typically we're 24, 48 hours in underwriting. We were seeing underwriting times delayed. We're seeing clear to close, CTC, delayed a little bit. We're seeing docs delayed a little bit. So it's creating just a backlog because of the amount of volume that's in right now.
Yeah. Okay. Yeah. And I know that, since COVID began, even quarantine, rates have been all over the place, sometimes changing during the same day, a couple times a day.
Absolutely so. Right when COVID hit in the beginning of March, that Monday we were locking in loans on a 30-year fixed conforming loan amount at 3 to 3.125%. And by the end of the week, by Friday, they were at 4.25%. Wow. Okay, just because the liquidity left the market that quick.
Right.
Okay, we are seeing, just phenomenal rates again.
So it sounds like it's definitely a really great time to lock in a lower rate refinance.
Oh, absolutely.
Yeah.
Absolutely. So depending upon credit scores and loan to values, right now on a 30-year fixed, you're probably anywhere between 2.75 to 2.99.
That's incredible.
Yeah. In 30 years of business, I never thought we'd ever see that.
I've been in the business since 2003, and I remember that year, 2004, 2005, where we had like 3.5%, and we never thought we were going to see anything lower than that. And now, now we're seeing it.
Yeah, it's amazing. It's amazing. So depending upon credit scores, on a conforming loan, you're probably anywhere between 2.75 to 2.99. So
2.75 to 2.99. That's unbelievable.
Exactly.
And I feel like when sellers are hearing about these interest rates, the way I see it, right? I see, hundreds of thousands of dollars.
Absolutely.
2.5%, 2.99.
Absolutely.
It's really cheap to borrow.
It's definitely cheap money.
Yes.
100%.
Yeah. And that's why, you're saying refinances is a really good time to refinance, lock in that lower rate. Sounds like it's a really good time to purchase as well.
Absolutely so. Absolutely. So we're seeing the purchase market just go crazy right now.
Yeah. And so are we here in our team. We are.
Absolutely. So, almost every, you definitely have multiple offers on every listing.
Yes. We are seeing that properties positioned right, marketed correctly. Absolutely. We'll have about 5 to 7 buyers to each property.
Absolutely so.
It's a really great time to sell. Troy, with so many changes, I know there's a lot of versatility happening this year in 2020. As a lending expert, what do you predict? What do you see happening for the rest of 2020 as well as 2021?
We're in just uncharted waters right now.
Yeah.
It's hard to say. As far as interest rates, it's hard to say. It depends upon, if the country starts shutting down again because of COVID.
Correct.
What the liquidity in the market does again.
Yeah.
Okay. So there's so much that's going on with that right now. And 2020, the only thing that you can predict or be very certain about is the unpredictable. Okay, because we've been hit with social unrest, we've been COVID-19, and everything in between. So it's just really hard to know what's going on with the markets. But where we are with where the economy is with the unemployments, rates should probably be even a little bit lower than where we're at right now.
Wow.
Yes.
Wow. So you kind of foresee that for the rest of this year, the rates just lowering a little bit more.
It all depends what unemployment does, and it depends how fast the consumer confidence goes up and how much people are spending. Absolutely.
Okay.
So.
Yeah.
And so unemployment is huge on that.
It is. Yeah, no, definitely agree on that. And then, with values, with property values right now, we are seeing, especially here in Long Beach, we're seeing appreciation. We're still seeing appreciation, just, very slowly happening, but still seeing appreciation.
I'd have to say that is pretty much all of Southern California right now.
Yeah.
Is what we're seeing. And that's in all 4 counties.
Okay.
Yep.
Yeah, that's great. So if you see, as a lender, if you're seeing that rates may, right, depending on unemployment, they may dip a little bit, right, by the end of the year, what do you see values? What's going to be happening to values once rates just dip a little bit?
I think values are going to continue to increase slightly.
Yeah.
Okay. I don't think you're going to see huge gains every month, but I do think that you're going to have positive appreciation throughout the end of the year, or at least until election time. Yeah,
I feel like that also. I agree with that also. We're going to see, again, slower appreciation, but still appreciating.
Yep.
Yeah, hopefully, yes, lower interest rates. That would be amazing. And it really sounds just like we were discussing even the beginning of the year, even last year, that it's definitely a seller's market right now with a huge buyer's advantage.
Oh, absolutely so. 100%, right. Especially where rates are at right now. We're seeing a lot more investment properties, non-owner occupieds, that are being purchased because of the cash flow now, and because of where rates are at.
Ah, wow. Yeah.
Yes. So we've seen a surge of investment properties.
Seen a surge.
I haven't seen in 30 years. Yes.
Wow. And that says a lot about our market right now. That says a lot about the health of our real estate market.
Yep. Absolutely.
And as I'm speaking to consumers, sellers every single day, homeowners, they're expressing that fear, right? They're expressing that, like, okay, what's happening, that uncertainty. So just keeping our finger in the pulse of what's happening every single week, because you said it's changing all the time.
It's such a moving target. Every day is just I'd have to say it's a new adventure almost every day. Lending
we said it's real estate and lending paradise every day.
Exactly so. So. But we do see things, every day we're seeing things just loosen up a little bit more.
Yes.
Which the overlays are coming off, and like I said earlier, is that, about 99% of the overlays have been taking off. Wonderful. So, the only thing now is that sometimes we are required to have some reserves with someone that actually is vacating a residence. So we own a property now, we're buying another property. Before, we just had to have a rental agreement and proof of deposit.
Right.
Now sometimes we are required to see at least 3 months reserves on the PITI payment of the vacating residence.
Just sourced or seasoned?
If it's an owner occupied loan, you can actually do it as a gift.
Okay, so you can do it as a gift.
Absolutely.
And just so who's ever watching understands sources, season source, it just needs to be in the account. Season, it needs to be there for a period of time.
90 days.
Season there 90 days. That is fantastic information. I mean, I'm sure that there are like case by case scenarios, right? That homeowners have, that consumers have all the time.
No loan is cookie cutter anymore.
Exactly. No loan is cookie cutter. So
absolutely.
I know with my heart of hearts that whenever I'm working to strategize with one of my sellers or working to put a game plan together for one of my buyers, I know that you are just such an important part of our team.
Thank you.
Absolutely. And making sure that the consumer understands all of their options so they can decide what's best for them. 100%. And so what's really great is that I know that anybody who gets in touch with you will get that type of service, will really 100%. Know that you're working towards their best of their interests. So absolutely. I really appreciate you.
Relationships are everything, and you always have to do what's best for the consumer, not what's best for you.
Yes, absolutely. And really appreciate you. Our team really appreciates you, Troy. And and I want to make sure that everyone knows where to reach you, what you specialize in. You specialize in FHA, VA, conventional, 2 to 4 units.
Absolutely.
Wonderful.
100%.
Wonderful. And all of your information is going to be here on this interview. Thank you so much. And just to recap for everyone, you guys, Mr. Troy McCleery has shared with us some of the changes that we have seen in COVID-19, has shared with us the health of the market that we have right now. And what we can foresee is that rates are going to remain low. We are should
remain low.
Yeah, hopefully to remain low.
Exactly.
Yet we are seeing slow appreciation, but yet still appreciating. And we have both agreed that right now, it's definitely a seller's market with a buyer's advantage.
Absolutely.
So if any of you are looking to just strategize, put together a plan, whether you're looking to purchase your first house, your investment property, or as you heard Troy, refinance and lock into that really, really low rate, you knew how to reach, you knew who to call, and you can also contact us here on our team, and we know who we'll put you in touch with. So thank you so much, Troy.
You're very welcome, Gia. Thank you for everything.
Thank you.